It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And we are back. It's Tyrone Jackson, the wealthy investor. Welcome to episode 216. Hey, do you know what's happening right now? We are in an upward trending market. That means a lot of the stocks that we favor in the wealthy investor world are rising, and they're going to continue to rise in the next 6 months to a year. This is the market you've been waiting for. This is the market that I love to trade and invest in. But we have a few things to talk about. So get comfortable, get cozy, because here we go. Okay. If we're in an upward trending market, what is making stocks rise? Well, the first idea is that all stocks are not rising, right? Stocks in particular sectors of the market are rising. Are healthcare stocks rising right now? Okay. Are auto stocks rising right now? Well, not really. We're seeing a huge rise in tech stocks, largely due to artificial intelligence, how it will be applied, but most importantly, how it will be monetized. Okay? So you and I can develop some wonderful technology in a home-based laboratory, but if we can't make money, in other words, monetize it, what good is that technology? Artificial intelligence is something that Wall Street is really interested in right now, because now, and listen to me, you heard it here first, Tyrone Jackson, the wealthy investor, because there will be trillions made over the next decade. That's right. We're going to start to see trillionaires, not just billionaires, and AI is a part of that. You know as well as I do, every time you log into your iPhone or your computer, there's some sort of update, right? And your computer's doing things on its own. Essentially, it's going to start running over the next 2 to 3 years more efficiently. Inside your computer, there are all these components, right? There's semiconductors and there are electrical conductors. All of those components need software to tell it what to do. Well, what is going to happen is the software, the operating system, is going to start to manage your computer so that it could last longer. What keeps it cool? What keeps it more energy efficient? Some form of data, we call it intelligence, that pays attention to how often you log on your computer and how good your screen looks, right? So all of these little elements are part of what they're calling artificial intelligence. Artificial because software is essentially thinking for itself around efficiency. Now, this software thinking for itself is not necessarily a good thing or a bad thing. It's all based on how it's used. So here in Hollywood, for example, it is going to be possible for a major motion picture studio to capture Tom Cruise's likeness, voice, and inflections, and how he uses his body. They will lift some of those images and make a movie without the actual Tom Cruise. Is that fair? Should Tom Cruise be compensated? Should he be compensated for his performance and, in the long term, the money that movie makes, what we call the back end? Well, that's what the Screen Actors Guild and AFTRA are fighting for right now. What happens in that instance? One of the things that I think we're going to start to see sooner rather than later is we're going to see more animated films produced by software. Because if you didn't have to pay the actors, producers, or directors, you just let the software create the film and a supervisor or two to oversee it all, the cost of making movies and entertaining audiences are radically going to come down. These are just some of the uses that we know about, right? So what does this mean for you and investing in the stock market? Well, all you have to do is keep listening to this show right here, and I'm going to guide you through AI over the next year or two as it develops. But here's what we know. Every sector of the marketplace won't benefit from AI. It's going to be very hard if you're in the healthcare sector and you have workers going to, let's say, the houses of seniors to take care of them. It's going to be very hard to replace that because that's human to human. right? But we're going to be able to enhance things like how long your car will last, how long the software, there's software in your car right now, right? And there's software in your Tesla, which is what I don't like about it. So recently I was in New York, and when I landed, I get picked up by a driver, and the driver who picked me up was driving a Tesla. And so I say to him on the way from the airport into Midtown Manhattan, how do you feel about the fact that at any moment, Tesla in the factory can shut down your car? He said, what do you mean? I said, well, this whole car is run by software, right? And it sends data back to the chief operator of whatever at Tesla, and they can actually stop this car from running right now because they have all the components that are under your hood and in your car logged in. They have serial numbers and a whole bunch of other things that say if that car needs to stop and we are locked in, they can actually do it. Is that good? Right. So when I was growing up, when everybody had like a Ford truck or maybe a Volvo or something produced by General Motors, nobody could lock you in your car, right? Because there simply wasn't software that can take control of your vehicle the way that it can today. But today, the more technologically advanced we are, the more we make ourselves susceptible to the whims of the people who create the technology. That's the part that's not so juicy. The part that's really juicy is you can own shares in the companies that are profiting from artificial intelligence, but you have to know what they are. So, for example, I was teaching live the other day in Los Angeles, and we were looking at Google shares, which really now is Alphabet. It's still so hard for me not to say Google, right? Now, we know the Google shares are a member of the S&P 500. They don't pay a dividend because Google doesn't feel the need to issue quarterly profits out to its shareholders. And we were looking at a chart, which, of course, is upward trending. And I was saying in this live event, I was saying to my students, do you all realize what Google does to generate revenue? And it astounded me that most of them did not, which is okay because most people don't know what technology to invest in. Well, Google really makes its money in something called search. So when you go to Google and you look up window repair, right, you'll see something that says sponsored ads. And those sponsored ads are small companies that pay Google to come up in the 1, 2, 3, 4, 5 listing in search. A lot of people don't realize that. And that company may have opened a Google AdWords account and they said, hey, we're willing to pay $1.50 to be number one under repair your window, right? Another company comes along and they say, hey, we also repair windows. We're willing to pay $1.75 to be number one. So what happens is the marketplace starts to dictate who will be number one on Google when it comes to search. And Google makes billions of dollars per quarter giving us the search results of companies that bid to be first in placement. Now, what's also interesting about Google, and one of the reasons they make billions, is because Google also owns YouTube. And what happens when you go to YouTube? Most of the time, you see what's known as a preload ad. Well, that is an advertiser who pays to be placed in that video. These days, you can make a commercial on your iPhone, and within 24 hours, it is on YouTube for your product or service, which, by the way, means anybody can be an advertiser right now, okay? All right, so that pre-roll ad that you see before every video, they pay a price to be placed there. That's actually search. So YouTube, outside of being a prominent entertainment vehicle, it is the second largest search engine in the world. Do you get that? Okay. So sometimes I have to talk to you about your financial education. I have to educate you, tell you where the technology is so that you can own the stocks that go higher. I hear a lot of people say, it's Google, it has to go higher. No, it doesn't. It's Disney, the stock has to go higher. Really? Have you seen Disney stock lately? No, the brand name or the name of the company does not make a stock price go higher. You have to understand the technology that you're using and the monetization strategy which feeds the company's top line revenue. So, if you're all about the trend, your job is to know what companies are upward trending in this market. More on that topic right after this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
We're talking about an upward market, an upward trending market, and that's what we're seeing. So what are the stocks that are upward trending? Well, obviously, I'm not going to give them all to you, but I can introduce you to the notion of two sectors, one upward trending, one not. You're not going to see Ford General Motors shares going anywhere anytime soon. They're in on the electric vehicle phase that we're in right now, but who's the dominant player? Obviously, Tesla. Very risky stock, does not pay a dividend, and it moves all over the place. But I expect that stock to continue to outperform the sector and be a part of this upward trend. I'm sure Elon Musk has something to do with AI in his automobiles that he has not told us. By the way, this also happens a lot on Wall Street, the flow of information, right? There are companies that have plans that we don't know about right now because they want to release their information sequentially as the stock actually rises. So the dissemination of information is another part of being a wealthy investor, right? Knowing where to go to get the right information. So in the auto sector, probably not really going to be hot right now, but Tesla, yes. Now, what is inside every Tesla? Semiconductors, right? Because these days, your car, particularly if you own an electric vehicle, is a driving computer, right? So those semiconductor pieces that make the car run have to be updated and replaced from time to time. So you see, the software industry has really taken over almost every facet of our lives, but really right now, automobiles. So if you knew which stocks put their semiconductors in Tesla vehicles, would you own the shares of those companies? You should know. Making a fortune in the stock market requires several things: discipline and information. And if you don't have the right information, guess what? You are locked out of the upward trending market. Don't let that happen to you. All right, so who are the companies who are probably going to win? I'm going to give you just a few. Obviously, Microsoft, right? Particularly their growth in the server environment and what they put in their computers and their operating systems. They're going to be able to monetize billions of dollars. How? They haven't told us. They're not required by law, but on Wall Street, they're looking to be one of the biggest beneficiaries of AI and how it's going to be used. Apple probably going to see the benefits of AI because they own so much. They own the hardware, your phone, and then the software inside the hardware, right? So I always think of trading and investing as being very fascinating because if you can find the pieces of the puzzle, you can find the companies that are going to benefit, right? So, for example, Apple started out as a hardware company, right? Then they got into software. Then they got into the cloud for their own products, which is their own proprietary cloud. So that's why we see that revenue constantly growing in Apple, because they've managed to become a hardware and a software company. And they're the first tech company to really have a fan base. Remember, people used to just wait online to get a phone, right? Like being at a rock concert designed by Apple, but they've developed what's known as a technological ecosystem. Say that for me one time. Technological ecosystem. So some of these companies are able to grow their profits without having to work with other companies. We now know that Apple has its own chip for its computer, right? Instead of having to go to an outside provider like AMD or Intel, they have their M1 chip. So everything they do is based on self-sufficiency in their technological ecosystem. Now, here's a blast from the past, and a lot of people forget this name. It's IBM. IBM is also going to benefit from AI, but most of their businesses, I started to use Wall Street terms, but I might as well just give it to you. They serve the enterprise. So whenever you're reading about a company and they say, hey, we service and make our money from enterprises, that means that they're serving hospitals and government and software companies and banks, right? Big companies that pay IBM billions of dollars to make sure that their back-end technological services actually work. Okay? So you see, this is a really big puzzle with a lot of things going on. And every once in a while, even though the tech stocks are the ones that benefit the most, you get a non-tech company that takes off out of nowhere for a variety of reasons. CMG is the ticker symbol for a little company called Chipotle. Now, why is that interesting from a Tyrone Jackson wealthy investor point of view? I'm going to tell you why. Because 5 years ago, these shares were trading at $520. And at the time that we're recording this show, they are over $2,000 per share. You never hear about it in the news. Why? Because sometimes the media, which is trying to get ratings for its television shows, only cover tech. They don't cover leisure restaurant business like Chipotle. So there are a bunch of hidden gems. And what I like to do is bring you those hidden gems and those stories out there. Now, if your goal is to be rich in the stock market or richer, you probably want to listen to me. I'm probably one of those guys that can speak the money language to you in plain, simple terms so you know what to go out and buy, what to hold, and what to sell. I know when I first started out in the stock market, if I could have found a podcast like this, I would have been all over it. So I thank you each week for listening to me, not only to prepare yourself for wealth psychologically, emotionally, and spiritually, but know where to buy, sell, or hold, and when the trends are changing on Wall Street. That was always my intention in the show, was to be able to help you, your family, save for college, have financial freedom, create residual income on a monthly basis so that you can have the financial life that you deserve. And that will always be the mission of the Trading Stocks Made Easy podcast. Hey, listen, if this show has helped you, send it to someone. Share it on social media. Don't keep wealth a secret. We've had enough of that. If you feel like you get value out of the show, send it to a friend and say, take a listen to these episodes. You may actually learn something. In fact, you may actually get the financial education you were supposed to get in high school and college. Because in high school and college, they teach you how to work for other people, not create financial freedom for you. That's why I'm here. Hey, join me at thewealthyinvestor.net. Be sure to download my free ebooks, take some of those online classes. You will love it. And hopefully, someday I'll get to meet you live and in person. I'm Tyrone Jackson, the Wealthy Investor, saying I'll see you right here on the next episode of Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.